You've got your property business, you've been out and purchased a brand new mobile phone or a brand new laptop. What you need to do now is you need to go into Xero and register that asset. So it's held in the balance sheet in Xero. Okay, so the first thing we're going to do then is we're going to go into Hubdoc. This is the software which is linked to Xero. It comes free with a Xero subscription. It basically enables you to insert your receipts directly and link them into Xero. There are other options. There's paid for software you can use as well, but this is a free one included with your Xero subscription. And for most kind of property investment companies, it should be sufficient. So the first thing to do then, there's different ways to do this. We can either drag and drop a file into there, or we can use the Hubdoc app to insert our receipt that way, or even email it to a bespoke email account we've got for our Hubdoc account. So I'm going to drag and drop. Give it a few seconds just to kind of process. Then we're going to see a receipt has arrived inside. Okay, it's got the duplicate button on mine. It won't have it on yours. That's because I've already processed this earlier just to save time, but I'm just going to show you the steps I went through. So we can see an invoice from Currys. We've got a number of different items in there. Total amount then is £1,339. What we're going to do then is go through and make sure all the details of the receipt is correct. So I'm going to click on here, receipt. I've got the suppliers correct, Currys, the date's correct. The total amount is correct, as is the VAT amount. So now I'm going to click below and make sure the Xero destination information is correct. So it's a purchase, awaiting payment, and the contact is Currys. And now we need to click the accounting codes. What we can do actually is, because there's in this case there's different equipment that needs to go to different accounting codes, we can actually click multiple. And what we can do there is we can add the details of all the different items in the invoice. I've grouped some of my items together as consumables. However, you could also go through and do it in full for each item. Then I click save and close. Okay, once I'm happy that the amounts add up, I'm going to click publish. Okay, now I'm going to go into Xero, into my dashboard, and into the relevant bank account. In my case, I purchased on a credit card, so that's the relevant account. And what's going to happen is, because I've put the invoice through Hubdoc and I've put it through correctly, it's going to link it to the relevant transaction. It's going to be highlighted green. I'm going to click OK. Okay, so that's basically put the transaction through. The next thing to do is register the laptop as a fixed asset. So I'm going to go on accounting, fixed assets. Okay, and what we're hopefully going to see then is, because we've linked that transaction to one of our fixed asset accounting codes, it's automatically put it in as a potential fixed asset to register. So it's got in here Apple MacBook Air. It's got the correct purchase price. So what we're going to do is just click into this asset. So make sure the asset name is correct. Check the purchase date is correct and the purchase price is correct. You can put warranty expiry details in there if applicable, and the serial number to provide more detail. We're then going to click asset type. If this was the first time you've done this, you're going to click new asset type, and so I'll take you through that just to show you how it works. Okay, so once you click onto a new asset type, basically you have different categories for the different assets that you hold. So I've got one called computer equipment, and I include in that mobile telephones and computers, but you could have different categories. So let's try setting one up. So computer equipment, new. You then have to basically select the relevant asset accounts. So assets basically appear in your balance sheet. So they're the assets of the company. So you need to make sure there is a requisite asset code in the statement of accounts, chart of accounts, sorry. So In this case, I have one for computer equipment. If you don't, then you need to create one, and you can to do that. You go into accounting, chart of accounts, and then you'd set up a new accounting code. So I'm going to search for computer equipment, and there, happy days, there's already one there for computer equipment. You then need to have a separate account for accumulated depreciation. So what I mean by depreciation is we have assets in our company, our business, and they have to be so assets have a useful life, and basically over the period of that useful life, we have to reduce their value. This is called depreciation. And so we have to have a set account for depreciation to go into, just so it doesn't get muddled up in the same asset account as the computer equipment one. So in my case, I've got accumulated depreciation on computer equipment. You could call yours similar. We then need to have a depreciation expense account. So the accumulated depreciation account is where, on an annual basis, all the depreciation for that year will go and basically reduce the value of that computer equipment. But then we also have an annual expense. So the annual expense goes in the depreciation expense account, and then the sort of cumulative depreciation all goes into the accumulated depreciation account, meaning that it's tracked over a course of multiple accounting periods. But the annual expense goes in the profit and loss, and this goes in a expense account. So in my case, let's search for depreciation. Got depreciation expense there. And you could separate that into depreciation of computer equipment, just so it's a bit easier to track. Okay, we now have to choose which depreciation method, and there's a few to choose from. Straight line or reducing balance. The straight line is fairly straightforward. So you have your asset costs £100. Straight line depreciation would mean that you said it was going to depreciate by £20 every year, and so every year it goes down by £20, or you could be a percentage as well. Reducing balance is slightly different. We say that there's it goes down by 25% every year, and so the first year it goes down by 25% of the full value, but then the second year it goes down by 25% of the new value at year two, and so the amount it goes down by every year is changing on an annual basis. That's the key difference. I would just keep it simple and go for straight line. We then need to go for the averaging method, and you either go for full month or actual days. I only go for full month. So it basically means for every full month you depreciate it. Actual days is the number of days actually that take place within the month. So I'm going to click on full month. And you can calculate the depreciation based on the rate or the effective life. So I'm going to click effective life. I'm going to make an assessment of how long I think this piece of equipment is going to last. So a new Apple laptop, I'm going to go with 5 years. 5 years of effective life. That's going to mean that basically that computer is going to be depreciated over its useful life, so over a period of 5 years. So I'm going to click save. Okay, so now when I go into to register the asset, it gives me options. I'm going to click on computer. The computer equipment new is the one I showed you before, but the computer it's similar. It's one I set up earlier. Depreciation start date, and I'm going to go with the day we purchased the equipment, which was on the 20th of October. It's already straight line and full month, and it's effective life 5 years. There's options to put in cost limit and residual value, but I'm going to leave those blank, and I'm going to click register. Hope you're enjoying the video. If you're finding it useful, please remember to like and subscribe for further content. That means that asset is now held within my register of assets, which is good. And the next thing I can do is check in the balance sheet to check it's there. There should now be a fixed asset called Apple MacBook Air, and also an option to run depreciation as well. Just to show you in the balance sheet, I've gone into my balance sheet and I've clicked onto computer equipment, and you can see there, that's the inclusion of the new MacBook Air, which has been added to my balance sheet. So I mentioned depreciation, let's click on it now. And depreciation is essentially reducing the value of the asset over its useful life. So what that means is every year there'll be a charge to the depreciation in profit and loss, and basically means the value of that asset has been reduced. And also the value in the balance sheet is also reduced over the course of the year as well. So we're going to click Run Depreciation. We're going to select the end of our reporting period. So for this reporting year, it's going to be 1st of October 2024 till the 30th of September 25, although your accounting period will be different. And then I'm going to click Confirm, and it's going to run depreciation for that asset. Hope you enjoyed the video. If so, please remember to like and subscribe for more similar content.